Hello traders, welcome to the channel. This is another live trading session. Today is February 10th, 2022. Today we got some bad economic data. Consumer prices in January surged. We got a CPI number at 7.5% year over year. So the indices are down. SPY is down 1.3%. You see how it completely fell off the cliff as soon as we got the number. The tech sector is down even more. Here is small caps, the Dow. However, a few names came out with positive earnings. For example, Disney had really strong earnings. Twitter was up pre-market just a bit ago. Now it's in the red, 3%. This is interesting, very interesting. I think I'm gonna put Twitter on my watch list as well. And the rest of the names are the usual bunch I'm usually watching. AMD, Coin, Facebook, Nvidia, Roblox, Square, Tesla, Twitter. So the market is opening in 5 seconds. So it's almost 7 minutes out of the open. I didn't take any trades yet. Market gapped down, but since then tried to push up a little bit. Names like Tesla have been just ripping out of the open. Nvidia also. AMD. Facebook. I think I want to try coin long here. It filled me at 106.16. I'm not sure if in reality I would get this price. Actually, I doubt it. The spread is pretty wide on coin. And Lightspeed's demo executions are actually based on last price, not on the best available bid or offer. So it's not exactly like in real life, but it's a decent approximation. I think it's the best demo on the market, to be honest, because at least if you plan to trade on Lightspeed, definitely get the demo from Lightspeed. So coin, I took 10 shares on this this opportunity because it just looked like a decent bear trap to me. The market looks strong. Everything on my watch list is grinding higher. SPY making new daily highs. So I'm gonna try to start scaling out of those because those bear flags, they're scalpable opportunities. They're not position trades where you need to accumulate and you know, get a 3-to-1 reward to risk. Oh, it filled me at 2885. So I guess it's not exactly like in reality. I guess I'll have to later watch this recording and adjust the fills for the actual ones. So I'm gonna put the next one at at above 209, but below 209.50. Everything is super strong. I'm in the driver's seat on this stock. Here you go. Already closed 1781 while risking just $10. So I'm gonna put a bid for another two just below the whole number, 210. It is already extended. Should I try holding through the pullback, or should I let it work? You know, I think I'm just going to put a hard stop to capture a point. At 207.16. Stop, sell, here you go. Yeah, the market gapped down after that bad economic number, but it's being bought up right now. I'm risking about a point to make maybe 1.5, 2 more points. My first bid is below 210, about here. I'm not sure if it will test the daily high. After all, it's at this critical resistance point right now. I don't know. I'm just going to let it work. I'm gonna stick to my original plan. Nasdaq is pulling back, but SPY just insane strength out of the open. Oh, what was that? You saw it in real time, but maybe it's like I don't know, a dark pool or something, but I've never seen this on Lightspeed. That's crazy. Crazy wick. Probably a dark pool or something. But everything is ripping. Everything is ripping. So I guess the question becomes, how can you know whether you should trade bull traps or bear traps on any specific day? I wish I knew the answer to this question, because yes, I took this bear trap here and it ended up being a perfect entry, but you know, I could have taken bull traps on some of the names and probably would not have worked out. For example, on Nvidia, I could have shorted this pump, thinking that it's a bull trap. It's gonna reverse, but it actually ended up pushing higher. I think, honestly, I don't know the answer. I wish I knew. I think the best thing we can do is just track as much data as possible and just let the data speak. I'm gonna try to get out on the offer with 2 shares, because I don't like how It's not holding VWAP. Perfect, got out of two. Already took 21.99 off the table. I also think that trading against the gap is often the best for bull and bear traps, because the idea of bull and bear traps is that a lot of longs or a lot of shorts are piling in at a specific point, and the market maker especially reverses the price because he or she knows, where the stops of all those people are, where they're putting their stops, and that's a liquidity pool for those market participants. So I guess you just have to make a decision based on what's the what's the most obvious, direction where most market participants are trading today, and trade against that direction. So got taken out of coin, $23.93. So I think it was a really good trade. I'm glad that I scaled out of it instead of, being impatient. I mean, on the contrary, being too patient and having to require a 3-to-1 or 4-to-1 or whatever. So this is good. Mm, looks like most stocks on my watch list are pulling back right now. This could be another bear trap. The price pushes below the daily low. That's where the stops of all the longs are. Everyone who's been buying, like after this candle, put their stops about here. Market makers know it. So if they want to push the price higher, for example, they would first pull the bids, let the price go below the previous daily low. At this point, all the retail traders start selling, and market makers are buying, accumulating inventory, only to push the price higher and start selling back to the retail traders. So my thesis is, if the price breaks below here, I'm going long. And I'm not going long like waiting for some sort of confirmation for, next 1 minute candle to make a new high or to go above some sort of moving average or whatever. You need to be like brave and enter while it's selling off. But looks like it might not happen because the market just started kind of ripping. Really impressive. We already reclaimed the yesterday's low on Nasdaq. Oh wow. Okay, okay. So I guess it's not going to happen this bear trap on coin. Maybe it will happen later in the day, but it's already 9:50 New York time. Usually I wrap it up around this time. Plus, I already had a good trade. I don't need I don't need to continue trading, to be honest. Like, I'm happy with $23. I'm risking just $10 per trade. It's a nice day for me. Again, the executions here would probably be slightly higher. The spread is like about 20-30 cents, so maybe I would have gotten executed at 26, maybe 22, 6, 36, something like that. 2646. So fairly, I would probably get executed here. But even then, this is still a pretty good move to capture. And how I decided to enter here, because it's a spot where a lot of shorts retail traders probably piled in. Because look, coin is one of the weaker stocks in the market right now. Uh, it opened down, sold off, then recovered, retraced a little bit into VWAP. A lot of shorts are getting in here. Those who hesitated to get in here are probably piling in here. And so, you know, again, my thesis is that market makers and firms that are pushing the price of those stocks around, they do stop hunting, and they know like where that this is the area where all those shorts are putting their stops, like above this latest pivot. So my theory, I buy where those people are selling, I sell where those people are covering. This is my thesis, and here it worked out perfectly. And here, for example, I was waiting for another entry long, but it didn't happen, and it's okay. You know, yes, it reversed a little bit higher, and probably, probably it will break this area and pull back. Just to flush some longs out and to get the stops of those shorts first. So those are the games that market makers are playing. The hard thing is to know, like, you know, well, when should you trade bear traps? When should you trade bull traps? And it's tough, especially I feel like in this market where we are jumping around, gapping up and down. Right now, we're sort of in this territory where the trend is unclear, sort of grinding sideways. I feel like either direction is valid from technical standpoint. Maybe the best thing you can do is just start with the least obvious right direction. So, for example, today we got bad economic numbers. We gapped down. Probably the bias of all the traders was to the short side, and of course, since 95% of people fail, what is going to happen in reality is going to take the money of those 95% people. So they need to be wrong most of the times. So whatever my sentiment, my personal instinct, my feelings tell me, I feel like I should go the opposite way. um, and obviously, like, I want to try not to fight a trend. If we're uptrending, obviously it's better to trade bear traps to be on the long side. If we're downtrading, on the opposite. But here, I feel like it's just really difficult to be able to. We're not trending anywhere right now. We're sort of grinding sideways, gapping up and down all the time. Like, for example, I don't know, like this period was really easy to trade because we've been above all moving averages and it's just, you know, just an escalator up. Okay, it's enough for the rant. Enough of my ranting. I'm saving my executions, adding them to my trading journal. Thank you for watching. I will see you in the next one.